Hey everyone, Catch Investor back to another video for today. So let's talk about ARK Invest, one of the ARK Invest's largest holdings, which is Roku. At the time of making this video, the stock is actually down close to 28%. Main reason, they reported earnings yesterday. So we're going to go over the earnings report as we've been doing with each and every company on this channel. If you missed some of those, look at the top right corner, you might find something you missed. Now, let's talk about Roku, because Roku is in a very specific position, in a very good position in the streaming world, TV streaming, connected TV, etc. It's a growing market and we're nowhere near the top. We're going to talk about the earnings call, a couple of specific points at the end of this video, timestamps below. So first up, they missed on a couple of key metrics, and that's one of the main reasons why the stock got hit so much. They missed on revenue, missed on ARPU, missed on next quarter guidance growth, but they beat on earnings per share and they beat on the active accounts. So you had a little balance here. Obviously the positive, in my opinion, for the long-term story outweigh the negatives, but we're going to have a look at all of those numbers in a bit. But first, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. Alright, so a couple of key results here. Also apologies for not posting this before the market opens. I was a bit busy, still went over the earnings call, but doesn't really matter. The stock was already down 28% or so. So they start with some key metrics for the 2021. So total net revenue grew 55% year over year to $2.76 billion. Platform revenue increased 80% to $2.28 billion. As you know, there's platform, there's player revenue. Platform is basically what you want to put your money in. Gross profit was up 74% to $1.409 billion. And then active accounts reached 60.1 million, a net increase of 8.9 million active accounts from Q4 in 2020. And I'll add an interesting fact is that Roku's US active account base has surpassed the US video subscriber of all the cable companies combined, growing their share and extending their lead both in the United States and internationally. Streaming hours increased by 14.4 billion hours year over year to 73.2 billion. Average revenue per user grew to $41.03, up 43% year over year. And it's the #1 TV streaming platform in the United States, in Canada, and in Mexico by hours streamed. Now this here gives us a better picture. So for ARPU, was $41.03. As we said, the expected one was 41.7, so a miss, but not that high. As for player revenue and player gross profit, as mentioned in the last quarter, they basically took the hit on themselves instead of passing it on to the consumer, which means it would be cheaper for the consumer, but the company is willing to take that hit to grow its active accounts, which I think is a good idea. Adjusted EBITDA of 86.7, beating the estimates of 77.6. EBITDA margin of 10%, beating estimates of 8.7%. So that's all good and well. Right now, I do want to talk about the Roku channel. The Roku channel is free to use, but that's where the ads kick in. So a couple of things here. It was the top 5 channel on the platform in the United States by active account reach in Q3 and Q4. It reached US households with an estimated 80 million people in Q4, and streaming hours more than doubled year over year for the full year. And remember, in the past we talked about the flywheel. Basically, it's providing content, content drives engagement, adds active accounts, those will get monetized, you get monetized, revenue, more content, more engagement, and the flywheel goes round and round. And this is exactly what's been happening with Roku. That's why they keep investing on new content, new ways to monetize, to drive engagement, etc. Now, I do want to mention something extra here, something very, very important, and just to show you how early this story is. So according to Nielsen, in Q4, adults aged 18 to 49 spent 45% of their TV time streaming, up 40% in the prior year. Yet, it is estimated that advertisers spent just 18% of their US TV budget on streaming in 2021. This just shows you the opportunity of ARPU increasing year over year. As you can see here, 2017 ARPU was $13.78. Now 2021, 41.03, and there's still so much room left to grow. Now I do want to touch on guidance for Q1 and then semi-guidance for the full year, because Q1 obviously missed, but for the full year, they still expect 30-35% growth, which is in line. So you might say that they expect growth to continue in the second half of the year. So they basically say here that for 2022, they expect ongoing supply chain disruptions will continue to impact the global economy and especially the TV market. Now, taking all of this into consideration, account acquisition will remain a priority, and they intend to continue to insulate consumer from elevated costs, which means the business itself will take a hit. This is something that will impact short term, but for the long term should be a positive thing. On the monetization side, delayed ad spend in vertical most impacted by supply-demand imbalances may continue into 2022. However, they view all these factors as temporary, and for the full year, they still expect total net revenue to grow by 35%. Now, as for Q1 outlook, they expect total net revenue of $720 million, up 25% year over year. So that's actually a miss, because the estimated one would have been 30% growth at $746.8 million. They also anticipate total gross profit of roughly $360 million and adjusted EBITDA of $55 million. As the business mix normalizes towards video advertising, they expect platform gross margin of around 60%. So they address this as well during the call. For the adjusted EBITDA of just $55 million, this is due to higher OPEX, which they expect to increase approximately 55% year over year, as they plan to invest aggressively this year. One analyst on the call asked why OPEX increased that much and when will it return to the top line. So basically they're spending it on three key areas: Roku channel, Roku OS, and the ad business. But the largest part of this spending goes to headcount, hiring. The reason is because, well, as they grow in different markets, as they grow different segments, they need to hire more and more. And since headcount is seen on paper at first and only growth after a couple of quarters, if not years, that's why you will see the negative impact first and positive impact should follow. Because before, the Roku channel didn't really have content. Now they need to create content, so you need a team for that. They didn't have anyone in Brazil. They want to grow in Brazil. You need a team for Brazil. So that's also one of the reasons. There's also wage inflation. Since it's a very, very competitive market nowadays, they need to compete with wages. So there's another negative impact on the business. Again, they say the largest hit in OPEX, the largest contributor to that actually, is from hiring. And lastly, they mentioned the partnership with Entravision in Mexico, basically the monetization part of that business, because they already entered that market with TVs, dongles, so they have that. They have the engagement. Now it's time for the monetization part. So that partnership with Entravision will certainly help that. LATAM is a huge opportunity for them. Brazil is next, another very, very big market where they hope to grow as fast as they did in the other markets. Almost forgot, they passed 20% market share for TVs with the Roku TV program in Mexico. So it's a huge deal and a huge sign that their international growth is working. They also made a little comparison between the operating system on the phone, the operating system of desktop, laptop, computers, etc. In the past, you had different operating systems, right? Every phone had its own, every computer had its own. Today, desktops, it's either Windows OS or Mac OS. Yes, there is Linux, but the majority of people is either Mac OS or Windows. With the phone, same thing. In the past, lots of different operating systems. Today, it's either iPhone iOS or Android. And they say the same thing will happen with TVs. You have a lot of TV operating systems, but that will consolidate, and they believe that Roku will be one of the standing winners out there. Numbers don't lie. They are the leader in that segment. So they expect this market to consolidate, which means more market share for the dominant players. So there you have it. That will be it for this video. I will add Roku to this channel's portfolio on stockcard.io. If you want to follow that portfolio, it's free. Link will be down in the description below, so do check that out and give it a follow. And I do want to hear your thoughts on Roku. You're a shareholder, you bought, you sell, you're a user. Let me know down in the comments below. And that will be it for this video. If you liked it, consider giving a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always guys, take care, stay safe, and see you all in the next video. Bye bye.